What's going on, guys? Quick update video. Everything looks absolutely perfect. Still in the middle of our retest, holding up very nicely. With that being said, let's jump right into the video, starting with the macro on AMC. Downtrend from 2017 until you find your squeeze January 2021, comparably to the downtrend that we have here from the breakdown in the flag in November from the June highs. Macro fractal break right here, this gap down that you see here, followed by a W pattern. Same thing right here, macro fractal break, followed by a W pattern. Before you actually get into the downtrend, again, you're just laddering down one step at a time. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 on both sides. I've covered this a million times by now. From the 6 point in both cycles, you drop down to the flat portion where you have 3 touches on the bottom, 1, 2, and 3. From your third touch, you form an uptrend, which breaks you out of the triangle, and then a straight line to your squeeze. Comparably to the current cycle, 1, 2, 3 touches on the bottom, and have broke out and now in the middle of the retest. So this looks absolutely perfect. I have no complaints here whatsoever. One thing that I do want to say is that this was going to happen no matter what. I've said this countless times now. Your buys are not affecting the stock price of AMC and haven't since this became a meme play. So that being said, and everyone knows my take on this, the algo is going to algo. It's going to run us on a loop. We're running on a loop. It's very clear. It's visible right in front of your face right here. This was going to happen no matter what. So, talking about the halts now on AMC. Through this together, it's just the macro, not even the macro. It's just showing from the January squeeze, the June squeeze, when this became like a meme play, and then the downtrend from the June squeeze. So obviously we got halted January 27th on the first squeeze. We also got halted June 2nd on the second squeeze. And then from there, you play out the flag, you break down from the flag, and then you get into the downtrend from there. Now, the halts that you're seeing on AMC are not malicious in any way whatsoever. The halts you're seeing are to ensure that the macro plays out correctly. And what I mean by that is every time we came up to resistance, imagine a barrier here, and we'll just call it the halt line. Really, it's a descending resistance. Every time we came close to breaking out of that descending resistance, we've been halted. Why? In my opinion, it's because there's so much buy pressure behind the stock sitting in dark pool waiting to go that when the algo flipped to buy for these runs, it almost got out of control. And when it got near our halt line or descending resistance, that's where you find your halt. And that brings you back down, kills momentum, and takes you back into the pattern, correcting the course. So halted here, again, halted here, come down, bounce up, halted again. You get into the flat portion. We got halted twice here, once here, and then once here, and then the final iteration now, and then the last halt that we just got. This halt did not happen on the spike. The spike was after hours. The halt happened Monday at open. I think it was 2 minutes into open on Monday. We got halted. Again, very close to losing control here. And all this halt did was take us down to the retest that we were going to get no matter what. As I previously mentioned, this was going to happen no matter what. And the halts that you're seeing are not malicious, rather just implemented to make sure the algo runs the course properly. And the course is the macro right here. So making sure we run out the macro the proper way. So now getting into the tracking on the micro, and what we're doing for this, and I did this in my last video as well, is looking at the flat portion of both cycles. The January 2021 cycle here, this flat portion leading up to the squeeze, and looking at the flat portion of the current cycle now. So starting with the daily EMAs. And first of all, the 20 EMA has crossed and closed above the 50 EMA. So looks very good. I've covered this multiple times as well, where the EMAs of the flat portion in both cycles, 2021 on the left, current on the right, the EMAs are the same. So the 20 EMA in the white, the 50 EMA in the green. So 20 EMA riding under the 50 this whole time down to your first bottom, and you get the wave move. Break back underneath and then come higher. Over here, exact same thing. Come down to your first bottom, 20's under the 50, and then you bounce higher right here. You get this wave move. From this point, which would be the equivalent of this right here, this point, the 20 crosses the 50 to the downside again on both sides. and then just hovering under the 50 there until you cross in the tri-peak with these 3 red dots. And that would be the equivalent of this right here. So you cross in the tri-peak, and then from there, you cross to the downside one more time on both sides, which is where you find your third and final bottom. From there, you form an uptrend fighting to break back over the 20 EMA before you get the gap up over it, and this would be your breakout. Comparably to this, your third bottom, fighting to break the 20 EMA, you finally get the gap over. You gap over the 20 and the 50 on both sides. So you get the breakout, and then you come into the retest, and pretty much the 20 is meeting the 50, and you're bouncing on top of them both in the middle of the retest before you confirm, and then gap up higher, which is where we are now. You got the gap up that we were looking for, the pullback into the retest, bouncing on the 20 and the 50, and very, very solid price action here, holding up on the retest. I mentioned the next time the 20 EMA crosses the 50 EMA to the upside, we would be either in the middle of our squeeze or about to squeeze. So the 20 EMA crossed the 50 to the upside and closed above it on Thursday, yesterday, closed 1 cent above it, and then today closed 2 cents above it. I am expecting us to squeeze, and I'll say this right now, and I stand by this fully, I'm expecting us to squeeze within 2 weeks. It would not make any sense to me if we didn't. Just as far as the macro goes, the macro is over. And I'll continue through the video and I'll show you what I mean by that. But the macro in AMC is complete. And the next thing that's going to happen with AMC is a squeeze and a new macro. So, moving on. Again, the daily gaps. First bottom here, 3 white flags here are your first 3 gaps. Comparable to the 3 gaps that you see right here. You have 2 right here on the green. As you do here, you have 2 gaps down in the final iteration here and here. I've covered this extensively. I'm just going to run through it quick. From your second bottom, you gap up into the tri-peak as you do here. You get the tri-peak on both sides. Come down from your third peak. You have 1 final gap down right here. As you see it here from your third peak, 1 final gap down. Come to your third bottom. You get that uptrend, again, fighting for the 20 EMA. Over here, same thing. You get the uptrend fighting for the 20 EMA before getting the gap up here. The gap up, the breakout, and the retest. Confirm the retest. Gap right here, macro fractal break, squeeze. The macro ends right here. Again, this yellow flag is what we're looking for. So we got the breakout, the gap up, and now come down for the retest. And very nice price action right now on the retest. That is the daily gaps. I've updated the RSI chart, and this looks perfect as well. So again, 2021 on the left, current cycle on the right. I'll run through this very quick. In the yellow, your first bottom, you have your first and second break above overbought, as you do over here. Your first bottom, first and second break above overbought. You also have your first break below oversold on both sides. The purple, you have your second break below and third break above, as you do here. Your second break below, third break above. In the red, you have your third break below on both sides. You get a bounce off of that, and then you come down and break below again right at the start of the green, which lines up perfectly at your second bottom. As you see here, you bounce up and then come down, break below again. Your fourth break below there, right at the start of the green, right at your second bottom. From there, you get into the tri-peak, where you have your fourth and fifth breaks above, as you see it right here, 4 and 5. And then into the blue, you get your fifth and final break below oversold on both sides, your third bottom. And then you get into the uptrend that leads to the squeeze. So you have your fifth break below here. You get this pop and this pullback here, which would be equivalent to this move, this pop and this pullback. Comparably to this here, this pop, and you get this W move. As you see it here, this pop and this W before breaking above for the 6th time on both sides, which lines up perfectly with this gap up right here. And then from the top of this move here, this breakout, you come down for your retest where RSI dips back below overbought, comparably to right here. This gap up right here, your 6th break above, and then coming back below right now. The next time we see overbought on the RSI, and by the way, this is the 4-hour with extended hours. The next time you see overbought on the 4-hour with extended hours RSI, we will probably be peaking or very close to peaking. So this looks great. So far I've shown the macro, which is perfect. I've shown the halts and explained the reasoning behind the halts. I've gone through the daily EMAs of the flat portion on both cycles, which are the same. I've gone through the daily gaps. I've gone through the daily gaps of both cycles, which are the same. By the way, there's more gaps here that aren't labeled. I've mentioned this previously. There's a lot of gaps not labeled because there would be flags everywhere and it would just be a fucking mess. So the gaps are the same. The RSI is the same. Perfect. Now, looking at the macro support and resistance on AMC, I've covered this multiple times as well. So you have this descending resistance here. Why does that keep happening? You have this descending resistance here, and you have this ascending support. So perfect rejection here, perfect rejection here. By the way, we got halted here. Perfect rejection here. Oh, no, sorry, not a perfect rejection here. You broke above here slightly, again halted. So you're halted here, rejection there, rejection here. Didn't quite make it up to the resistance here. And on the bottom, all three of your bottoms of the flat portion on the daily are higher lows. So higher low, higher low. Here would have been the third bottom, fighting for the 20 EMA. You got the gap up we're looking for. Pull back for the retest. Perfect double bottom here on top of the triangle. 452. Closed last Friday on a hammer, and then this was this week's price action. You got to bounce off on the higher high. That gravestone doji I mentioned was a bearish candle. The next day we got a pullback, another hammer, and then back-to-back green days again. Closed the week on a doji. The volume profile on this looks perfect as well. Very low volume all throughout this. Very high volume on the breakout and a very low volume retest. So all tracking and fractal work aside, just looking at this as a technical move, it's perfect. Picture perfect breakout and retest here. Now, again, what I'm showing here is the flat portions of both cycles. January up top, current cycle on the bottom. I'll run through this quick as well. So you come to your first bottom here, very choppy down here as you do here. And from there, I mentioned there's more gaps that aren't labeled, like there's a gap here, this gap here that you see here, this gap up here that you see here. The gaps are the same. So from this gap up, you have 5 peaks, these white dots, in increasing height. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. The current cycle, this part of the flat portion played out much faster than it did up here. And then getting into the final iteration, we're pretty much playing out one-to-one. The W with the tri-peak in the middle that led up to the squeeze, more or less, we're playing this out one-to-one. So you come down, you get this move in the green, as you see it here. You broke slightly below the horizontal line here, the yellow horizontal line. Here you didn't. It's never going to be perfect, but it will be very close. I've mentioned that multiple times. You get this gap down here to your second bottom, as you do here. Gap down to your second bottom, gap up from your second bottom into the tri-peak, the 3 blue dots here. And then from your third peak of your tri-peak, you come down one final time to your third bottom on both sides. Again, this is where you're fighting for the 20 EMA on both sides, and then you gap up over the 20 EMA, and then pull back for the retest is where we are now. This looks perfect. It's taking the breakout retest is taking a little bit longer than it played out in 2021, but it is perfect. Once we confirm this retest, we will be gapping up from here, and that is the end of our macro. Once we confirm this let me repeat that. Once we confirm this retest, we will be gapping up from here, which is the end of our macro, and the new macro will start with a squeeze. There's a few different price targets, possible price targets, I should say, for the squeeze. I'm not going to be talking about them in this video. There's only a few that make sense to me. I will be talking about that very soon, though. Just moving on. This is just showing the final iteration. Exactly what I just showed you, just zoomed in on the final iteration. So you get the move in the green, your second bottom, the tri-peak, your third bottom, again, fighting for the 20 EMA. Both cycles, same EMAs, same gaps, same RSI, same everything. Gap up from here, come down for your retest. This retest I mentioned is more or less a W. So you get the move to the top, and then it's more or less a W with a higher leg on the right. You confirm, bounce off, gap up, macro fractal break. That's it. That's the end of the macro right here. This gap up right here is the start of the new macro, and it's just straight line into your squeeze from there. So looks perfect. So you have your top, your left leg, and what looks like could possibly be the right leg, a higher right leg now. There is a case that we will pull back one more time and form a higher low than you saw here. There still is a case for this. And if you've been watching my lives all week, I've been tracking this all week. There's still a case that you pull back and form a higher low than what you saw here. But there's also a case where this is the left leg, this is the right leg, and now we're about to just take off. Let me just move on before I get into that. So I drew this in my last video. It's more or less a crayon chart, just showing the possible scenarios where you'd either just start climbing here and you get the move, or you would pull back to a slightly higher low and then get the move. Here is my tracking. I've been tracking this all week. Again, so before I even do this, what we're looking at here is what I just showed you before, where you get your third bottom right here and you get the gap up and the pullback into the retest. So your third bottom, your gap up, and pull back into the retest. So we're zooming in on this on the 5 minute now. So here's the gap. Here's the gap. You get this crazy fucking wick right here, as you do here. And you come down, very high red volume candle there, by the way. And there's one right here too. So that looks nice. You get the wick down, and then you come up. You get this W move, which you have here. It's there. You just can't see it because it's scrunched together. But there's a W move there, and then you get the top, which you do from the top here. From there, you come down to the first leg of the W, as you do here. And then you get this move, this like stair step move here, where you bounce up to this first step, which would be the green line here, as you see it here. And then from there, you start this uptrend with a descending resistance, as you see it here, this uptrend with a descending resistance. You break through the descending resistance on both sides. From there, you gap down. So this would be the case where we gap down, and you get a gap down here to this white line, approximately, I would say 454, like 4 to 460-ish. I'm not going to be perfect with that, but somewhere in that range, like not forming a lower low. The low here was 452. There's one wick to 451, but 452 was pretty much the low here. I do not expect to form a lower low if we get this move down. With that being said, it's also very possible, as I said, this is a W with a higher leg, so there's your left leg, come up, your right leg is slightly higher. It is possible this was your left leg, you come up, and the right leg is here, forming now slightly higher, and we could just go straight into upside. It's hard for me to say this because this is tracked so perfectly, so I would be expecting to gap down, but we have a few catalysts coming up. One being earnings, which I believe is Tuesday pre-market, so you could definitely expect some volatility on earnings. And the volatility, in my opinion, won't be to the downside. I doubt we get a gap down 40 cents on earnings. That would just, it doesn't really make sense to me. With that being said, I'm kind of leaning towards the bottoms in, and we're just going to start climbing here. And earnings potentially is the gap up that we're looking for. And at the same time, your macro fractal break, which will take you a straight line to your squeeze. We're still waiting for Zern to figure out how to sign a paper. I'm not sure when that's going to be happening. All the people saying that she's going on vacation next week, she's not. So don't believe everything that you see. FUD spreads so easily in this community because people just don't take the time to actually research this shit. Not that I give a fuck about Zern or fundamentals, but I'm just saying. And here's just me. I'm showing. I drew the price action pretty much before it happened. So, I mean, if you've been in my lives all week, I drew this on Tuesday or Wednesday, expecting this pullback and then this uptrend here, which would have been right here, this pullback, and then you get this uptrend, and now looking for this pullback to double bottom, which would be this here, before you confirm that, and that's it. Again, I'm leaning towards we're just going to get the upside. So, with that being said, with everything I've just showed you, I have absolutely no reason to believe that we're not squeezing within the next 2 weeks. As far as the macro goes, we have checked off everything. We've checked off the last thing I was looking for with the daily EMAs, the 20 crossing the 50. The 20 has now crossed the 50. We have checked off all of the gaps that we're looking for, besides this yellow flag here, this next gap up, which is your macro fractal break. This is where the new macro will start. Why does it keep changing? That's really pissing me off. So we're looking for this gap here. This is the last thing. This retest confirms, we gap up, and that is the end of the story. We're squeezing. We're squeezing from this gap here. A new macro will start, and we will be squeezing. There are a few different possibilities for price targets, as I've said. It is completely possible that this squeeze will be MOAS, which, if it is, it's not to be like a dick, but it's every man for themselves. I can't tell you how that's going to play out. That MOAS scenario will be the most volatile, crazy price action anyone has ever seen. So a MOAS situation, pick your price targets, set stop losses, trailing stops, whatever you have to do. I can't tell you how to play that. You have to play that for yourself. What I will say is that I ran macro fibs on both cycles. I've covered this multiple times as well. And as far as our next macro, the price target, the fib pull is $140 price target. That's pre-split, pre-reverse split, pre-conversion, $140. And the move up that we got here, this breakout iteration and the retest, as I previously mentioned as well, was very exaggerated. I was not looking for this much price action. Played out perfectly. We just got more. The peak was much higher than I was looking for. I was looking for a peak roughly mid $5 range here, which would have been the equivalent like to the middle of the tri-peak. We got almost $9. And I mentioned this previously. All this is telling me is that our next macro is going to be much larger, meaning price targets will be much higher. This move here, this spike that you're seeing here, is this right here. This gap up right here, and then the pullback for the retest. That's what you're seeing here. So very exaggerated move to the upside. And all this is saying to me is that the next macro, like this is one macro here, and then this macro is bigger, all-time highs, bigger macro, higher price targets. It looks like the next macro we're about to get is going to be bigger because the move was very exaggerated, meaning price targets will be higher, meaning 140 is most certainly on the table. And that is pretty much it for the video. So hope you guys have a good weekend, and looking forward to next week.